What is AI? AI is bringing down the marginal cost of intelligence, the marginal cost of software, the marginal cost of being an accountant, medical, lawyer. So legal, medical, finance, intelligence, and software. The core 5 things that you need to achieve anything in your life are worth effectively 0, or as close to 0 as they'll ever be.
This is a profoundly important moment in modern history, so important that even those who spent decades preparing for and hoping for it are saying they don't actually know the gravity of what they've unleashed or how badly it will impact the human race. In a recent blog post, OpenAI CEO Sam Altman wrote, "The 2030s are likely going to be wildly different from any time that has come before. We do not know how far beyond human-level intelligence we can go, but we are about to find out." Dario Amodei, CEO of Anthropic, said, "AI could wipe out half of all entry-level white-collar jobs in the next 1 to 5 years. There is no doubt that the force of the coming disruption will be bigger than anything humanity has had to deal with in a long, long time, and it's coming faster than we ever thought. A massive tsunami is about to hit, and one asset is sounding the warning bells that nothing is as it seems. In fact, experts believe Bitcoin has been sending these warning signals since at least 2024, a signal that is now being picked up by other assets and major economic indicators. According to recent reports, the annual BLS benchmark revision shows a downward revision of 862,000 jobs in the 12 months through March 2025, the second largest cut in history, exceeded only by a 902,000 reduction during the Great Financial Crisis. The World Uncertainty Index, which measures global economic and political uncertainty, has surged past 2020 pandemic highs and is now higher than the 2008 Great Financial Crisis and even above the 2001 recession peak. Something has broken, and Bitcoin is telling us we are past the point of no return. In his latest podcast, Strike CEO Jack Mallers gives a detailed breakdown of the storm approaching and why he strongly believes Bitcoin will be one of the few things left untouched when the dust settles. As we bring you clips from the video podcast, as well as deep, insightful analysis from Arthur Hayes, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Look at the Mag 7. This tweet from Charlie: all 7 members of the Magnificent 7 are now down on the year and underperforming the S&P 500. So I've talked about, I think something's brewing. Job revisions look really bad. Consumer confidence looks really bad. Consumer sentiment looks really bad. Mag 7 looks really bad. Bitcoin looks really bad. It's a matter of time before the NASDAQ and the S&P 500 take a tumble. I think something like Liberation Day or worse is coming. I do. And I think Bitcoin is going to bleed until they print the money. Now, the way this ends is they're going to print the money, right? I mean, we've talked about this. It's either going to be a hard default or a soft default. A hard default is the United States just comes out and says, we give up, everything's over, we're defaulting, the world's going to fall apart. They could have done that over the last decades. They haven't. Instead, they've printed the money, which is a soft default. A soft default is defaulting via inflation. If you print enough money, paying back $40 trillion is not that hard because a dollar is worthless. You know, we could afford paying back 40 trillion Venezuelan bolivars because a Venezuelan bolivar is like literally worth less than the toilet paper that wipes my ass. So if you keep printing the dollar, then you're effectively defaulting via inflation and debasement of the currency. And so what's my evidence that this is playing out is Mag 7's getting absolutely hammered. Microsoft down 17%, Amazon down 14%, Tesla down, Apple down, Meta, Google, Nvidia. I mean, it's bad. It's bad. And then if you look at the Mag 7 over gold, I mean, it looks really bad. It's about to make new lows, and it's clear that capital is rotating into gold. And what does that mean, guys? Capital rotating from where into gold? From sovereign paper, from sovereign debt. So the era of saving in sovereign debt is dead. We are entering a sovereign debt crisis. Sovereign debt capital, these treasuries, these paper notes from governments are rotating into gold. Why not Bitcoin? I've said Bitcoin's just not big enough. It's just not mature enough yet. And that's fine. Like, it's all about your time preference and it's all about why you're here. I'm 31 years old. I firmly believe gold has already failed us. It's going to fail us again if we let it. We've engineered a better solution, but it's going to take a lot of man hours and a lot of conviction and a lot of leadership to lead us to the glory days of Bitcoin. We got to put our head down and get to work. And I'm young enough where I hope, God willing, knock on wood, that I can be alive for the coming decades to see that through for future generations, for my kids. So I'm not worried. I got nothing but time. As long as I eat my ribeyes, get some sun, exercise, take care of my body, I got nothing but time. But the reality is Bitcoin's just not big enough. $1 trillion asset can't absorb central bank buying. It can't. China ran a $1 trillion+ trade surplus last year. They can't pour their trade surplus into Bitcoin. Their trade surplus this year might be bigger than Bitcoin's entire market cap. So when you look at Bitcoin versus gold, it looks like Mag 7 versus gold. It looks like tech versus gold. Gold is absorbing the largest market in the world, which is the bond market, the treasury market. And Bitcoin is behaving like a tech stock, which, by the way, I don't want to be too negative. Bitcoin's going to outperform once they print the money. Just to be clear, my one sentence prediction, the next 1 to 2 quarters are probably going to be really volatile and potentially a crisis. And then they print the money and then we're off to the races. Bitcoin's the best performing thing. And so to me, it's time to turn on your DCAs. It's time to buy the dip. Buy the tech guys' dips. These tech hedge fund guys are getting margin called. Tech is getting murdered. And buy their dip. Hodlers of last resort, the sovereign individuals, buy their dip. But what's happening in Japan is the largest story in macroeconomics, bar none. It's not close. It is a debt crisis playing out in real time. And if the Japanese currency needs help, they're going to have to sell all their U.S. assets. If they sell all their U.S. assets, they're going to cause a crisis. And so the question is not if there will be a crisis, it's when there will be a crisis and when authorities will step in. That's the question. Are they going to step in before the crisis? They usually don't. They usually let there be pain so that they have political cover. Think about it. If Janet Yellen printed all that money before Silicon Valley Bank fell apart, they'd have been like, what the hell? We were on the back half of all this inflation. You, Janet Yellen. But because banks are falling apart and people were literally going to the bank and saying, I want my money, and they're saying your money's not here, then she has the political cover to print the money and be a hero. So I expect things to get dicey. I really do. And on top of that, let's get into AI and how it's accelerating, because it's one thing to have a sovereign debt crisis in Japan, effectively foreshadowing what's going to happen to the United States, and for central banks and sovereigns to be rotating out of government paper and into gold. It's an entirely other thing for this AI thing, which is one of the most deflationary inventions of our lifetime, to be accelerating at the pace that it is. So chapter 2, AI is accelerating and debt systems hate deflation. Okay, this guy, Matt Schumer, he wrote this piece. I mean, look at this screenshot. As of today, it had 83 million views on Twitter. It's titled Something Big is Happening. I'm going to get close to my screen here and just read it. A little story time for the kids at home. Trust me, it'll be worth it. So he writes, think back to February 2020. If you were paying close attention, you might have noticed a few people talking about a virus spreading overseas. But most of us weren't paying close attention. The stock market was doing great. Your kids were in school. You were going to restaurants and shaking hands and planning trips. If someone told you they were stockpiling toilet paper, you would have thought they'd be spending too much time in the weird corner of the internet. Then, over the course of about 3 weeks, the entire world changed. Your office closed, your kids came home, and life rearranged itself into something you wouldn't have believed if you described it to yourself a month earlier. I think we're in the this seems overblown phase of something much, much bigger than COVID. I've spent 6 years building an AI startup and investing in this space. I live in this world, and I'm writing this for the people in my life who don't. My family, my friends, and the people I care about who keep asking me, so what's the deal with AI? And getting an answer that doesn't do justice what's actually happening. I keep giving them the polite version, the cocktail party version, because the honest version sounds like I've lost my mind. And for a while, I told myself that was a good enough reason to keep what's truly happening to myself. But the gap between what I've been saying and what is actually happening has gotten far too big. The people I care about deserve to hear what is coming, even if it sounds crazy. I should be clear about something up front. Even though I work in AI, I have almost no influence over what's about to happen, and neither does the vast majority of our industry. The future is being shaped by a remarkably small number of people, a few hundred researchers at a handful of companies, OpenAI, Anthropic, Google DeepMind, and a few others. A single training run, managed by a small team of over a few months, can produce an AI system that shifts the entire trajectory of technology. Most of us who work in AI are building on top of foundations that we did not lay. We're watching this unfold the same as you. We just happen to be close enough to feel the ground shake first. But it's time now, not in an eventually we should talk way, in a this is happening right now and I need you to understand it way. Then the next page, and this is the last page I'll read, I know this is real because it happened to me first. Here's the thing nobody outside of tech quite understands yet. The reason so many people in the industry are sounding the alarm right now is because this already happened to us. We're not making predictions. We're telling you what already occurred in our own jobs and warning you that you're next.
What Mallers is really outlining here is a collision of forces that markets rarely have to process simultaneously. On one side, you have mounting stress inside sovereign debt systems, the very foundation upon which modern asset pricing, liquidity, and risk models are built. On the other side, you have a technological acceleration cycle driven by AI, a force that historically compresses costs, erodes margins, and introduces deflationary pressure into economic structures already dependent on perpetual expansion. When capital begins rotating defensively into assets like gold, while risk assets struggle, it's rarely just a portfolio adjustment. It's often a signal that confidence in the stability of the financial architecture itself is being tested. These shifts don't unfold loudly at first. They creep, then cascade. Layer Bitcoin into that environment, and the tension becomes even more pronounced. A still maturing asset caught between behaving like a high beta technology play and aspiring to function as a monetary hedge will inevitably experience violent repricing during periods of macro uncertainty. Former BitMEX CEO Arthur Hayes captures the full in a recent Substack article, detailing not just what's happening with AI, but also the warning signals from Bitcoin and what lies ahead. Here are some excerpts from the article. When the fire alarm rings in your apartment or office building, you usually dismiss it, but sometimes death comes swiftly to those who ignore obvious warnings. Given the amount of noise swirling throughout our daily lives, understanding what alarms to heed could save your life or your portfolio. Bitcoin is the global fiat liquidity fire alarm. It is the most responsive, freely traded asset to the fiat credit supply. The divergence recently between Bitcoin and the Nasdaq 100 index sounds the alarm that a massive credit destruction event is nigh. In the article, Hayes argues against the optimistic narrative surrounding AI. In his words, before the system fully absorbs the impact of this ongoing disruption, millions of high-earning, debt-laden, white-collar Americans will lose their jobs, and the banking system will buckle under the assumed losses on its holdings of consumer credit loans and mortgages. Next, Hayes paints a vivid picture of what the disruption will look like, particularly for the banking industry. While the Fed is fighting windmills, AI-related job losses will destroy the balance sheets of American banks. And then finally, the non-TBTF banking stocks will start crashing. Depositors will flee to safety in JP Morgan CEO Jamie Dimon's arms, and credit markets will seize up. The market will frantically ask which credit sector is next to experience the wrath of AI optimization. And because scared traders optimize for immediate liquidity, they will dump everything. The stock market collapses and Bitcoin trades sideways, or Bitcoin slices through $60,000 and continues going until the Fed turns on the money printer. Everyone knows that AI is the most transformative general-purpose technology in human history. The consensus also believes that once AI comes for the arrogant, college-educated, paper-pushing lawyer, Lord Elon, or more likely his Chinese competitors, will launch AI-powered robots that reduce the price of labor to near zero. Faced with these truths, the Fed must print bigger than it's ever printed before, and the best part is that the politicians are so afraid of AI-sponsored credit deflation, they will gladly support another round of QE infinity. Hayes ends the article with some suggestions for Bitcoin and crypto investors. Because AI models now build their next iteration, the pace of improvement occurs non-linearly. This means that if you operate on the assumption that AI isn't accurate enough to do some knowledge-related tasks because you tried last year, your opinion is out of date. Shit is getting real, and millions of knowledge workers will swallow their pride and apply for a government handout like a welfare king or queen from the hood. I don't believe Bitcoin traders will see through to the eventual Fed banking bailout until consumer credit-sensitive stocks experience serious pain. I won't short the market, but long selling to raise cash if one hasn't done so might be prudent. If an asset's price drops from 10 to 5, a short makes 50%, but when the price rebounds from 5 to 10, a long doubles their money. Therefore, the game is to be liquid, nimble, and play for the rebound. Shorting is a mug's game. Always be longing convexity. What makes moments like this so difficult to interpret is that they rarely look dramatic while they are forming. There is no single headline that declares a regime shift, no bell that rings to tell investors the rules of the game have changed. Instead, instability appears as noise, volatility, divergences, strange price behavior, narratives that stop making sense. Mallers sees stress building in the plumbing of the financial system. Hayes sees Bitcoin acting as a liquidity alarm. Different lenses, same underlying message. Transitions of this scale are never linear, never gentle, and never evenly distributed. If this storm does unfold the way these voices suggest, the winners will not be those who predicted every twist, but those who remained psychologically prepared for uncertainty itself. Liquidity, patience, adaptability. These become survival traits, not just investment strategies. Because when systems reset, when capital reprices, when policy reactions arrive late and violently, the greatest risk is rarely being wrong about direction. It is being positioned in a way that leaves no room to respond. If you found this analysis valuable, take a moment to like the video, subscribe to the channel, and turn on post notifications. Not for hype, not for price predictions, but for clear, grounded discussions when markets become unstable and narratives start breaking down. And most importantly, I'd genuinely like to hear your perspective. Do you see Bitcoin as a warning signal, a risk asset, or something else entirely? Let me know in the comments.